So this is the first trade for Tesla in our report, and let's look at what is happening with the Qs, with the SPX. So Tesla's kind of in a free fall, and then SPX is above its key level, trying to stay above its key level, and QQQ is kind of in the middle of nowhere. So Tesla rips, we have to take our profit quickly. I'm surprised he didn't take the profit there, but let it play out a little more. Okay, so what happens here is there's a profit take at 937 and then there's a roll up. So takes the profit here and no, doesn't take the profit here, waits till it hits, wait till it goes up and then does a roll for 275, which is the next 257, which is the strike above, which could also be a 255, but I guess he chose that strike. We're gonna have to get smart on why he chose that strike. So first first play doesn't take profit here, doesn't take profit here, chooses here. He believes it's gonna move, but I might have taken profit right here. Sometimes he does take profit right there. And then he rolls into the next one. A minute after he exits the first take profit. And then he also has another take profit too, which I'm not sure if we have that marked. So there's another take profit somewhere around here. But I believe the alert was missing. So let's keep going. So he takes his first profit here for 257 at 203. Yep. And then holds it. No, he does not stop out here. Sometimes he will stop out here, but I think he's fairly confident on the higher time frame. And then he just knows it's going to go up. So he could have easily stopped out here, but it didn't break the key level. Sometimes you'll see him stop out there. So he gets all out of that contract, the 257, and that is a huge. He makes like 400% on that last take profit too, and then he rolls up again at 934. So when he takes profit, he rolls up again almost immediately. And then the stop out is the next day. So it's struggling, it's struggling, it's struggling. It's not getting above the 290. And I guess there's not enough profit to take there, and it still hasn't come back down. So it gets here. He takes he basically stops out, but he doesn't it doesn't really make any money. And then he rolls at 1026. After he stops out, he rolls again on the 300. So he takes his quick profit after 6 minutes after taking the 300. And then the second take profit, the alert is missing, but he stops out for the same price he bought back in. Okay, so then on November 8th, there's a lot of action here. He buys in at 9:38, sells at 9:50, sells at 10 o'clock. But while he's doing that, he's rolling the 310 at 10 o'clock, and he exits at 10:13, 10:21, and then he rolls into the 315 at 10:22, take profit 10:29, take profit 11:25, and then he rolls up on the 317.5 at 11:23, take profit 12:02, take profit 140, and then rolls up again at 2:11 p.m. Holds it till 2:15, quick profit take, and then he stops out at 2:30. So he caught that whole move, and it all happened within 4 hours. So yeah, you could buy a long dated option, but you wouldn't have made as much money as doing all this fancy footwork. So all of these solid lines are the rolls, and then he's staggered his exit points along the way. So he almost perfectly timed the exit points. So let me play it out a little slower. Let's try to play it in. No, we can't do that. So let's just play it a little slow. So he's taking his profit all along here. Because every bar is moving up, the premiums are going up like crazy. There's a lull here. He doesn't do anything. Pops again. Gets back in. A little lull. Takes his profit. A little bit of a lull. And these are 5 minute candles. So on the 1 minute candle, you might have a little more time to react. Okay, it pops. It's getting up to 321. He's taking his profit. And then he gets back in. And then he kind of just knows not to get back in there. 330, 215. And this last one, he stops out. It's a down candle, so he sees it going the other way. And if this whole move he caught from 299, so 300, all the way to 330, the stock moved 10% in a couple hours, and he made a lot of money. That was probably the best trade of the year. So we have to keep studying it because there's so many lessons in between here. The staggering, the efficient exiting of positions, the the waiting out of when it was right, and then stopping out knowing it was going to die off. It's just a master class in extracting max value. It's almost like he knew what was going to happen. Let's speed it up a little bit. Okay. Okay. So we're back the next day, and we're just waiting for these 5 minute candles to play out. I'll probably use a minute candle when I'm locked in on a underlying. Okay, so our entry point is near 350, and let's look at SPX. So SPX is above 6,000, which is a key point, and QQU is above. So everything is looking set up and good. So he takes the first profit here. And it's coming down, so he decides to get out. So that was a sharp. So I believe his execution is near perfect. I guess he was waiting for that second profit target, which would be 60%. In hindsight, it looks like he could have taken it here, but he knew it was not going in the right direction and he got out. Would he know it's going to go all the way down or all the way up? He does not know. So he's just protecting his gains. The thing I noticed when analyzing the trades is it's even though it seems aggressive, it's pretty defensive. Uh, he'll take his profit. Often you'll see him buy in, take his profit, everything goes according to plan, and then he stops out similar to this. So sometimes he'll stop out here, sometimes he'll stop out at the profit, so he can still keep some of the profit. The one of the important things is if you pick the right trades, it'll play out pretty soon. So when I was taking some practice trades earlier, or some real trades, it wasn't doing this. Well, this could just be with Tesla, but I found that it works like this with Tesla and SPX. So the idea of sizing for zero, I'm thinking the stock's going to come back around, but most of the trades he takes, it works out almost instantly. So that's something to note. Another thing that spurred this move on is the election was on November 6th. So the whole kind of Tesla move was probably the catalyst was also the election. And then in between all this, the next few trades up until the next big Tesla trade is you might have one or two roll-ups, but nothing crazy. So the reason Brando, the coach, says to wait for the big trade. So the big trade would have been all of this. If you had known and you just took a 1 monthly option, you could have captured that whole move, and that would have been a significant. I'm guessing it would be like a 5 to 10x, but there's no way of you knowing it would have went in this direction. You could have also bought a 3 month, and this once it started to tail off, you could have sold it. The timing is important. I think if you can learn how to roll the weeklies like this insanity, then you probably capture more of the move and a bigger return on investment. So I think it's worth the time to study it and to learn how that move works. And so in between this, the next big trade is going to be around February 12th. Everything else is just like an average trade now. So there's going to be an entry point, and then you might have one roll up. You take your 40, you take your TP1, TP2, and then you try to not lose a trade. But it's probably for uh, more advanced people, more advanced traders. Beginners don't need to really mix it up. They could do it to get experience, but they don't need to mix it up. And then if you actually are a really advanced trader and you have a ton of capital, You also don't have to mix it up because it's probably you have better things to do. You could go travel and then just wait for the big setup. And then if you already know how to execute on it, you could just step back in and execute on it. You don't have to be trading every day. And if you don't want to do all the management of the contracts, you could probably just buy a long dated contract, which should cover you. And you just have to catch when the move breaks out, which is the most important part. So that's my summary. And I'll tell you some of the things that I learned uh, while backtesting Tesla. So the higher time frame does matter. We kind of want to know what's going on with SPX, with QQQ on the higher time frame. So if it's in a downtrend, we have to keep in mind it's going to be hard to get continuation, right? If it's an existing uptrend like this one, it's you just have to be ready to take your profits because the continuation is going to be there. It's just how much profit can you extract. But this only comes around a couple times a year. So like here's one, and you have to be ready or you will not be able to capture the move and you'll have to wait for the next solar eclipse, so to speak, right? SPX, if it's at all-time highs, it's helping, and if there's a news catalyst, it's also helping, and then QQQ. So SPX is at a key 6,000 level, and Tesla is ramping up, and it probably broke. This was probably the key level that it needed to break, and then all hell broke loose. So we have to watch out for those. We have to know those levels and then be ready for those levels and not waste our time on these small trades every day when the market's not setting up. So when I say the market's not setting up, if you were to try to trade in between here, you will probably get chopped up. You'll probably lose your money, and here as well, right? If you had just waited for this, even if you're not that good at rolling, you're going to make money if you're going to play the upside. You're waiting for these spots, and all between here, you're just watching, waiting. It's almost like hunting. You're waiting, and you do not want to get caught up in this. So when you're just looking back at the charts on the daily time frame, it gives you a good idea of if you should be trading or not, right? SPX the same thing. If if it's like this, you should not be trading. So you have to understand the patterns. There's an up, chops around, down, and then eventually there's going to be an up again. You just have to be prepared and wait for that up. So here's the up, chop around, down, up, chop around, up, chop around, up. So we want to stay out of these scenarios where there's chop and only focus on this. But we have to be watching the market to be ready for when that breakout does occur. But yeah, so that's a little easier on the higher time frame. And some other lessons learned that you can find out. They're not really taking a lot of puts on Tesla. So we're just waiting because the market's designed to go up, so we're waiting for it to go up. There is a skill on entering and a more nuanced skill on exiting. So on exiting, it's how you take your profit. It's do you stop out when the stock starts showing weakness? And backtesting helps us see it, but we still have to do it in the field. And we have to get ready to roll and understand how we're going to roll. So set up your workstation in a way where you can roll really quickly. And because you've seen it in back testing, you'll be prepared, more prepared, but you might miss it. Um, Only now, after back testing, do I understand what they meant by don't get involved in these days. There's not much to gain. So even if you do win a trade, you're not going to win a lot because it's not going to accelerate that fast. The hard part is just waiting for this opportunity. And you can keep saying it, but the human mind does not really want to listen, right? So there's all these little nuances, but the key thing is what are the key levels? Where is it likely to break out? And then try to extract max value from those scenarios. So the main stocks that we trade are Tesla, Meta, Nvidia, Palantir, SPX, QQQ. SPX is good around specific levels, not a lot of continuation unless the market's really hot. QQQ, not a lot of continuation, meaning rolling up. Tesla, a lot of rolling up. Meta, a lot of rolling up when the market is hot, but you still have to avoid when it chops around. So lots of lessons to be learned. That's some of the lessons there. And we'll continue to post videos about backtesting, and you pretty much have to do it yourself. So there's about 600 trades within the Discord Elite Options, and join, and then you have to do the backtesting yourself and ask yourself these types of questions. So I'm still getting more in depth of which questions to ask, what to watch for. The thing I'm really paying attention to is like the entry points right now, and then also the exit points. Sometimes he'll let it run, sometimes he'll stop out, and he seems to be right most of the time. So he's developed an intuition over the past 15 years on when it's going to move and when it's not going to move. And I'm starting to understand when he's saying, do not get involved in this. Up, down, just wait for the fat pitch. And don't waste your money in these environments because it's not a good environment. Wait for this, be prepared for this. And in the meantime, you could be doing back testing and just learning to understand how it all works. So understand your ignorance, understand you don't know everything, and try to learn how a few key underlyings like Tesla, Meta, SPX, QQQ, and NVIDIA operate, and then you will know what they are talking about.